Is SoFi a good buying opportunity, or is it doomed after Robinhood came out announcing that they're going to start offering banking services, making them a direct competitor to SoFi, as if they weren't already in some type of competition as it was? Those are some of the things I'm going to answer in this video. I'll also go over the technical analysis for SoFi if you're more of a short-term trader, and then we're going to jump into the fundamentals and look at some of the revenue growth and different segments that SoFi has to offer to see if it's overvalued at its current price or not. And depending on what information that you're looking for when it comes to SoFi, I'm going to leave all the timestamps down below. If you like content like this, please consider subscribing to the channel, like this video, and let's get right into it. Before we jump into the technicals real quick, I just want to go over some of the reasons why, as I mentioned before in the beginning of the video, why SoFi has been seeing a lot of selling pressure. And one of the reasons why is because, again, Robinhood came out mentioning that they're going to start offering banking services. This is a pretty big deal in a sense because obviously they're going to try to be taking market share, and I believe they're like the closest competitor to SoFi just because they're both digital platforms, right? Like they don't have a brick and mortar facilities like a Bank of America or a Chase, which in my opinion I think is insane. That's one thing I love about SoFi and Robinhood in this scenario, is that they're digital banking. They don't have that overhead cost that these traditional banks have. You know, I mean, I still see new like JP Morgan Chase banks being built and Bank of America banks. I mean, these things are not cheap. You got to pay for employees to run them and electricity. And like, you know, when it comes to operating costs, it's insane. And I just personally feel like it's not the future of banking. I think the future of banking is online banking. But nonetheless, that is one reason why we're seeing a lot of selling pressure in SoFi. And then sadly, another reason is because anytime an analyst comes out and they downgrade a stock, guess what? The stock goes down. I mean, it's like clockwork. I think it's the stupidest thing ever because, you know, you might have 25 analysts covering a stock, and all it takes is for one to go from, hey, I'm bullish to, I'm going to downgrade this, you know, because I'm not feeling so bullish anymore, right? And the stock tanks. And this was, you know, put out March 27th. I'm pretty sure that day the stock dropped like 10 or 12%. Granted, the market has been dropping too. That I know, and that plays a big part as to why SoFi has also seen a lot of selling pressure. But I think we all can agree that SoFi has been seeing like a ton of selling pressure. Okay, so, you know, with that being said, let's go ahead and jump into the technicals. All right, and you can see here from the highs, right? I mean, SoFi was trading, you know, around, you know, anywhere between like what, 15 to 17 bucks. And was holding that support, and then, you know, now call it, let's say 17 being our high, right? We were down as low as 35%. Currently, at the time of this recording, we're down 30%. All right, I mean that's an aggressive sell-off. All right, even when the market's going down. But with that being said, looking at the technicals, all right, right now I have the daily time frame pulled up. You can see that we were oversold and we bounced off that RSI right around the 30. All right, which also correlates with 200-day moving average. I mean, this would have been a perfect trade right here. Put your stop loss under the 200-day moving average. You have a couple confluences here. Obviously, I mean, it's getting oversold. It's oversold in the RSI on the daily. You also are reaching the 200-day moving average, which is typically respected. So there was a few things in play there, but obviously this is not a thing now, right? This trade has already happened. And as you can see here, you know, bounced off the 200-day moving average, went right up to this 50-day EMA, all right, and got rejected hard. Right? And then came all the way right back down to the 200-day moving average. So let's zoom in a little bit and take a look at this. All right. So this 200-day moving average here is very similar to what we were seeing as, you know, the 50-day moving average on the daily time frame. And again, the 200-day moving average is typically really respected. All right. It's, you know, if we're trading below it, it's bearish. If we're trading above it, it's bullish. I mean, that's like the best way to look at it. So once we broke below it here, you know, we came back up, we tested, you know, the EMAs here, and you can see between the blue and the green line, right, the 21-day and the 50-day. I just use these, by the way, I just use these EMAs for, you know, more of a shorter term trade because typically when it breaks below these, it gets bearish, and when it breaks above them, it gets bullish. So it kind of works as like a confirmation, and you can do this on like different time frames, obviously, depending on what your trading style is, right? If you're more of a short term trader, like a swing trader, right? Maybe like a month or 2 months or 3 months, then I think a 4-hour time frame is what you want to be using. But if you're like a really short-term trader, then you know you want to come down to time frame. You have like a 5-minute or a 15-minute, you know, whatever it is, your preference. But nonetheless, We came down, and like I said, we went right back up to the 200-day moving average, and we got rejected super hard, okay? And so far, we have made a higher low, okay? So we want to see that, right? And, I mean, it looks like it's playing out right now. What's happening? Just like we did before, right? We're getting rejected off either the 21-day or the 50, and right now we're getting rejected off the 21-day moving average on the 4-hour, right? And again, you can just kind of see this pattern playing out here, right? And then when we finally break above it, what happens? We rip up, right? And then now we're back below it, and now we're testing it again. So this would be what I would look out for. You know, if this thing starts pulling back, you could look at taking a position around here, right? And this is not financial advice. This is just trade ideas, you know, just my opinion. But if you're looking for a short-term trade on this stock, then you could come in, you could take a position around this area. You know, you decide exactly where you want, but you're looking for a higher low. So in my opinion, you know, this is previous support right around here. 1150, 1142, you know, right around there. And then I would have a stop loss below this last wick right here, right around $11. Because in my opinion, if we break that support right there, which would also be, you know, breaking below the 200-day moving average again, I think we're going lower. How much lower? I mean, it's hard to say. It really depends on the overall market sentiment and whatnot. But there is a chance, you know, that we rip back up to this moving average here. And so if you're looking for a take profit, that's where I would have that right here. All right, right at this 200-day moving average. And I'm pretty confident that you're going to at least get rejected off here. You know, whether you pull all the way back down, I mean, that's hard to say, but, you know, pretty confident once we get back up to this level right around here, you know, and obviously as time goes, this moving average will kind of fall a little bit lower. Pretty confident it's going to fall right around here, right? Within this area, right? I mean, nothing is like perfect, but if it came in here and made like a higher low, you know, anywhere between right around like, I don't know, I think 1350, right, would be a good take profit, give or take. I mean, if you're getting close, just go ahead and take it or trail your stop loss, okay? But, you know, you can see here that this has been previous, you know, previous resistance where we kind of got up here. And once we broke above it, you know, we held and then rallied. And then you can see here, we kind of tested it. We tested it once, 3 times. And then once we tested it for the 4th time, we, you know, broke below it and fell hard, right? And then what happens? And we come back up here, we pretty much test that area, right, again, and then we fell again. So that's my opinion. You could take a position around this area for like a swing trade, have a stop loss below here. Whatever your risk tolerance is, though. Again, this is not financial advice, so you make that decision. I'm just giving you ideas, but if it breaks below here, I'm out. And if it gets up to this level, I'm out, right? I'm taking profits. I'm not waiting for it to go higher. Could it? Yes. And if it breaks above, you know, obviously this high here and the 200-day moving average, then I could see us, you know, ripping right back up to, you know, 1650, even, you know, to 17. But again, depending on your risk tolerance and what your trade idea is, if you're just looking to dollar cost average into this thing, you know, cut into the chase, is this a good buying opportunity? Yeah, I mean, I think if you're going to dollar cost average into the stock, I don't think this is a bad time to do so. Like I said, I just wouldn't put all your eggs in one basket. But that's where we're going to jump into next is the fundamentals to see, you know, kind of what the revenue growth has looked like for this company, the different segments that it, you know, works in, and the growth within each of those segments to kind of see, you know, what the future potential could be for the stock. And comparing it to, let's say, maybe a competitor, is it overvalued or is it fairly valued where it's trading at now? That's what I'm going to touch on right now. So jumping into the fundamentals, first thing I'm going to look at is the total revenue, the net income, and operating expenses. Okay, these are very important aspects, obviously. You have the total revenue, which is in the blue, okay? And as you can see, this is pretty. You know, this is going back from 2017. All right, we saw a little dip here, but ever since 2018, it's been on a nice incline, okay? I mean, this is exactly what you want to see in a company is just steady returns, all right? And then we go down to, let's see, the net income, which is arguably more important, right? This is how much money you're taking home after your expenses. You know, this was negative, you know, for a while, and this is why the stock was trading so low. And then what happens in 2024, right? We finally break positive in a pretty big way, you know. I mean, being down, what is this in millions? So we were down 300 million to up 500 million. I mean, that's a pretty big swing, right? And this is why you saw SoFi stock jump so high, right? They're like, holy shit, like we're positive. SoFi's making money now. You know, the sky's the limits. But, you know, then reality kicks in and, stocks pull back and they have to cool off. And so that's why I never recommend, chasing these things. If you missed it, kind of wait for a pullback like this to, take a position. The other thing here is the operating income, which is in the purple. Okay, same story as the net income. And again, this is just like their day-to-day activities, right? And like how much it's costing them to run the business, saying how much money the company's making on its core business, right? So you want to see all this positive, obviously, and the fact that it just turned positive, this is huge for SoFi. Now it needs to keep this up, right? That's the biggest thing. All right, so this is just an overview of SoFi real quick, but I just want to note a few things. The 3-year revenue growth and 5-year revenue growth, currently it's at 43% and 39%. So, this company's been growing at about 40% year over year. That's terrific. All right. That there's nothing wrong with that at all. And then we come over here to the industry, right? And we look at some competitors. And the closest competitor I found was American Express, right? And obviously these companies still are pretty differently, but when I'm comparing PE ratios, right, you can see here, the forward PE ratio on this is 45 compared to 17, which is pretty substantial. But let's dig a little bit deeper into this. So, just real quick, let's pull up American Express. So you can see here, their 3-year revenue growth and 5-year revenue growth, 11% and 8.7%. Okay, so the rate that SoFi has been growing at is pretty much 4 times the amount. So think about that. If they're trading at a forward price to earnings of 17, but their revenue growth is, let's say, 10%, and SoFi's revenue growth is 40%, right? Well, then it trading at a 45 forward price to earnings, that seems pretty reasonable at that point, right? It should be like 4 times the amount as American Express. Now, obviously, American Express is more established company, and SoFi is more in like the growth phase and, really just getting going. With that being said, the one thing you want to keep your eyes on, yes, it's been growing at, 40% for the past 5 years, but are analysts and is the company, are they projected to keep that growth rate? Right. And so when we go over here, you can see, let's just look at like the median of what the, analysts are projecting. So, we have a 24% growth in 2024, 25% growth in 2025, 20% growth in 2026, and then dropping down to 13% growth by 2027. All right. So you're seeing a little bit of a decline here. But you can say, over the next, 3-4 years, we're looking at about 20% growth is what the analysts are expecting. Okay. And so that's still good, right? That's still double of what, let's say, American Express is, growing at right now, which is, 8 to 9%, which is still better than what, let's say, comparing it to American Express, which is just one company that we're comparing it to. But, I looked at the same data for them and they're going to, expect to grow about 8 or 9% for the next 3 or 4 years. All right. So, it's more than double the expected growth, right? So when you're trying to decide if a stock is overvalued, undervalued, those are kind of the things you want to look at. If it is trading at a higher PE ratio, which, let's go in and check that out right now. So taking a look at the price to earnings, right? And this is a trailing price to earnings, not a forward looking. All right. So we're trading at a 29, about a 30 multiple. All right. So not too bad. It's still considered pretty rich. I guess to compare, like Amazon, Apple, Meta, they're trading around like, the mid 20s to, 30s. But they're obviously, respected companies. Now, the difference is, though, is they're past their growth phase already. All right. Where a company like SoFi is still in the growth phase. So that should, allow it to trade at a higher multiple because it has higher upside, right? Like it's just now getting profitable, they have so much more to grow. And we're going to go over, their segments here in a second. But again, comparing this to, let's say American Express, they're currently trading at a 19, right? Which is, 10 lower than SoFi. But this is the difference, is that SoFi has been making about 40% a year in revenue growth, right? Or growing at about 40% a clip. And American Express, let's say on average, 7%, 8% is what they're growing at. So that's like, 4 times less than what SoFi is growing at. Now, let's take it to the analyst estimates of future growth, and they're saying around 20%. Well, that's still more than double. All right. So if we double, American Express's PE ratio, then that would put us closer to 40. All right. So in my opinion, is SoFi a good buying opportunity? Yes. And is it overvalued? I don't think it is, giving its prospects and what the future holds for this company. All right, so to wrap this up, let's look at the different segments that SoFi trades in, okay? So let's see. You have their lending revenue, right? This is obvious, right? Like student loans, private loans, mortgages. You can see here that, since 2018, this has been growing nicely, right? This is beautiful. Again, this has a lot to do with their total revenue, right? It looks like the same chart. But you can see that their lending services keep going. This is the thing about the lending services, right? It takes money and capital to give more loans. And so SoFi actually is in a position where they're declining loans just because they don't have the capital, right? There's like a ratio when it comes like your balance sheets and whatnot that you have to uphold in order to give out more loans, right? Like you have to have the capital. You can't just be giving out loans and not have the money to back it up pretty much, right? Or you have to have like at least a certain amount of money on the books. And so they don't have that much capital yet to, enter into like, more loans or more mortgages or whatnot, which just means that they have more room for growth when it comes to this segment or the lending segment, because like the business is already there. They just aren't big enough to, be able to give out those loans yet. So going back to, let's see, technology platform. All right. So that is like fintech, right? This is another segment that they have. And these are arguably they're like their 3 biggest segments, just to make that clear while we're going over it. So you can see, back to December 18th, hardly any growth, 19, none, 20, we start seeing some, 21, 22, 23, and now here in 24, we're looking pretty good, right? We're looking really good. And that's like, that's another opportunity for them. Now, this is not one I'm as convinced on. And so the thing about fintech is, these are other companies coming to SoFi, and SoFi offers services like, like digital banking. Let's say a company, comes to SoFi and they're like, hey, we want to become more of a digital platform, right? Help us do that. They'll sign a contract and they'll get paid to help them make that possible, right? It could be maybe digital wallets or peer-to-peer lending. There's a bunch of different things, but this obviously relies on other companies coming to SoFi and, asking for their business, right? So it's a little bit harder to judge the growth of this, but still there's obviously potential here. And that's one thing I love about SoFi is not only are they a lending institution, right? They're also a fintech company and they offer all of those services. And obviously as the world keeps growing, I think we all can agree, technology and the digital world is probably the future. So I can see this only growing bigger and bigger for SoFi, but arguably the biggest growth potential for SoFi is their financial service revenue. Okay. So once again, you can see here in 18, 19, 20, this was hardly even existing. And then, you just saw a huge jump. You're more than doubled here. Almost doubled here in growth in those segments. And so what are financial services? It's going to be like your stock trading and, money management when it comes to, investing and your debit cards and credit cards and the transaction fees on the other side of that. So, think of Robinhood, right? That stock has been seeing massive growth, but that was like their starting point, right? Was financial services with, stock trading and whatnot. And SoFi is really just now tapping into that. And that's where I could see a lot of future growth when it comes to SoFi. So is SoFi a good buying opportunity? Absolutely. I think this is one of the few companies that has so much growth potential ahead. I wouldn't be surprised if this stock was trading at, 30, 40, 50 bucks, in the next couple of years, just because of all the potential that it has between its lending services, which is continuing to grow, its financial services or fintech, its financial services, getting into, stock trading and credit card transactions and debit cards and, getting a percentage of each time someone uses those cards and the fact that they're a digital platform, right? I think that's the future. There's just not as much overhead costs with these companies. I mean, it makes them so much less risky than, starting a traditional bank with a brick and mortar location, right? Because again, it costs, a ton of money to build them, and then a ton of money just to keep them up and running with employees and the electric bills and this and that. And then you just multiply that by, 100, 200, 300, 400 locations. The amount of capital that it takes to get big growing that way is insane. And the fact that SoFi is growing so well and they're really tapping into like the newer generation of banking and the younger crowd that they like everything being online, and again they're growing their customer base so much. So with that being said, yes, I think SoFi is a screaming buy at these levels. If it keeps dropping, I would just keep dollar cost averaging, and this is assuming that you have a long-term outlook. Yes, Robinhood is going to take some market shares, right? That's a given, and competition's healthy at the end of the day. I mean, there's competition in every industry, in every business, but they're both going to reap the benefits of this. Now, one other thing to keep in mind, obviously, since the financial services is a big, part of the business, depending on how the stock market is doing, we've been seeing like a lot of euphoria here lately in the stock market, and you have all these new traders and retail traders opening up accounts, and this obviously helps grow, that segment a lot faster. That's something to keep your eyes on, is that when the market starts pulling back and things start cooling off, people start losing money, right? They start getting scared and fearful. Then they stop trading, they stop depositing money, they take a break, they have more cash. This is going to hurt those segments for both Robinhood and SoFi. But those times come and go. Eventually, we'll get over it. And at the end of the day, I believe SoFi has a ton of growth potential. And, it's honestly one of my top stocks to own at this point. So I hope you guys found this video helpful. If you're still here, consider subscribing to the channel, like this video, and I'll see you guys in the next one.